Hello, hello, hello. Welcome, everybody. Hope everybody is doing well. Let me share my screen here. There we go. All right. Welcome, everybody. I'm extremely excited to have you. Welcome back to another Rake Trades free webinar series. I like to do these like once every quarter or so and just sort of do a check-in. Let me make sure that everybody is also muted and stays muted. But once a quarter or so, I like to do these and just sort of offer as an opportunity to give back as a thank you to you all. I know that you all follow me, you all support me on social media. For whatever reasons, I know that I am weird. My Instagram stories are perhaps some of the weirdest things posted on the internet. Yet, for whatever reason, you all choose to support me. You follow along with me. You cheer me on from the sidelines. And I always like to, about once a quarter, do some sort of give back in the form of a webinar where I can hope to transform the way that you trade a little bit. And it has been a little while since I've done one of these. I think the last one that I did was the Loop 2.0, the Spiral, which was an epic webinar. We're going to talk about that in a little while. But it's been a while. It's been a minute since I've done something as an opportunity for you all just to gain some extra insight and education. So over the course of the next like 3 or 4 minutes, I imagine more people will trickle in. Our attendance will get popped up a little bit more towards the 300-ish mark. I know that this timing was a little bit inconvenient for those who are on the West Coast and are working a 9-to-5 job. They wouldn't have been able to attend live. Also, for those on the East Coast, it's also kind of pushing at 4:30. Some of you may still be at work as well. So for all of you who are tuning in all across the world, I am very grateful to have you. For all of this who are watching the recording after the fact, I'm very appreciative of you as well. And I hope that today I'm able to deliver a valuable presentation to you all that kind of can shift your perspective on a few different things in a really fun light, right? So tonight's agenda is thick. We are going to cover a bunch of different things. I want to make sure to offer a bunch of different types of value to you all, covering a variety of different topics. So in tonight's presentation, we're going to start with some introductions and expectations. We're going to break down who I am for those of you who aren't necessarily super familiar with me. At some point later on, after we go through the bulk of our presentation, I'm also going to dive into the charts a little bit, and I'm going to review the Netflix trade that I took yesterday, as well as what happened in the NQ today. I was watching for a few specific things, but ended up not trading at all. I ended up not taking any positions on the day, and I want to break through the charts a little bit, break down the charts a little bit, and exactly what I was looking at. Right. However, the bulk of tonight's agenda is going to be on what I call toxic traits. Right. So for me, I was thinking we're going to talk about this more a little bit later on and how I sort of came up with this presentation and why we're talking about it. But essentially, the question that we're going to ask is, what are the most common sources of failure for traders? How can we identify those? How can we identify them in a way where we actually remember it and it actually sticks in our brain? Because anybody can just talk about these things. You need to have some sort of way of sticking it in your brain, kind of like memorizing things for a test, right? You need to have some way of getting it into your brain, sort of like a muscle memory. So I'm going to talk about it in a fun way. And then we're going to ask the question, how can we reverse engineer these common things that cause people to fail and ultimately have them like work in our favor, right? So with that being said, let's dive into it a little bit, right? So I just saw somebody has requested to record the thing. No worries, I'm recording it. So you're good. You don't need to record it elsewhere. So again, yes, the recording will be sent to everybody who's in here. So no worries, you will all definitely get the recording. So who am I? I imagine that most of you are here from my Instagram. That's the social media platform that I post the most on. I don't really post very much on anything out there. I'm working on YouTube at the moment, but I imagine the vast majority of you are here from my Instagram. And you're familiar with me. My name is Jake Ricci, but I always like to give a little bit of background for who I am in case there's somebody out there who doesn't know who I am, or in case there's somebody who was invited by a friend, whatever the case may be. All right, so my name is Jake Ricci. I've been day trading for 5.5, almost really coming up on 6 years now. It's a couple months away from 6 years, which is crazy. One of the things I always like to mention to people is that my learning disabilities, and I don't do this in any... The reason I bring this up is that I was born with several learning disabilities, dyslexia, ADHD, speech impediment, hearing loss, all these things, right? And the reason I bring that up always is to say that there's nothing that I was born with that makes me like supposed to be a good trader, right? I don't think I was necessarily supposed to be born to be like great at anything with all the learning disabilities, but definitely not trading, right? So if I can ultimately figure out how to be successful at this, you all can as well, right? In early 2021, I went full-time as a day trader. And then in late 2021, I decided to create my social media page. And ultimately, that led us to this point now where I'm here giving you all a presentation. And it's going to be the most funky presentation I have ever done. I have definitely never talked about something in this sort of way before, but I think it's going to be very interesting. And I think it can add a whole lot to all of yours trading, right? So for those of you who have not been to attended one of our webinars live, I have a pretty unique webinar and teaching style as a whole, right? So the first thing I'd like to mention, this entire presentation is a risk. Like I said, I've never talked about something in the way that it is before. You'll see what I'm talking about in just a few short minutes, but you should just get a heads up. I'm taking a risk by doing this. I'm hoping it works out in a fun way that helps people improve their trading, but it's definitely a shot in the dark, so to speak, right? Because the main reason is that I don't like to give the same presentations over and over and over and over again. The traditional way that people give webinars is they'll do a free webinar, some people, and then a period of time later, they'll do the same webinar over again in hopes of just new people watching, right? I like to do these as an opportunity to give back to people who have been following me for a while, right? So I always like to do something new in every webinar that I do. The hard part is eventually you just run out of stuff to talk about, right? You just run out of things. Trading, there's only a finite number of things that you can say, right? And because I don't like to give the same presentation over and over again, when I was thinking about how I wanted to do this, I was like, okay, let me figure out how I can structure it, because I've already covered so much trading psychology. On my YouTube channel, there's the 2-part series about the loop, which was 2 webinars I'd done before, the loop 1 and 2, right? Which is, in my opinion, some of the best trading psychology material out there since Mark Douglas, right? I've also covered a lot of strategy. If you refer to the charity webinar that I did last year, that goes super in depth on my earnings strategy. I have the opening print video that is very thorough on my strategy. I have dozens of trade review videos up where you can get in-depth reviews on my strategy, right? So I've covered trading psychology, I've covered strategy. I'm asking myself, where can I genuinely solve problems for trader? And then I was really high in bed, and I was like, why don't I just identify the most common problems that I've struggled with and that I know other traders struggle with, that my students struggle with, and then let's reverse engineer them, right? And let's figure out, okay, what are these toxic traits, so to speak, that we can identify, and how can we correct them? Right? So why this topic is because it's universally applicable. It doesn't matter what asset you trade, whether you're a Forex trader, whether you're a stock trader, options trader, crypto trader, I don't care. Well, you could trade eggs for all I care, right? This information is going to be applicable to you, right? The reality is that if one person is able to identify their toxic trait based on the presentation that I give now and correct that mistake going forward in their trading career, then this entire presentation is worth it. And it can be potentially life-changing for anyone who can resonate with some of the stuff that I'm talking about, right? The nice part about this too is I want to give real actionable steps, barring 1 or 2 of these toxic traits where it's hard to give like an actionable step. Barring that 1 or 2, on all these other ones, I have real actionable steps that you all can take in order to improve and potentially reverse some of these toxic traits. Right. Then the last part is, again, I'd like to make trading fun again. The last few weeks have been very difficult. Yesterday was a fun trading day. Today I didn't trade, but the last few weeks have just been stressful, right? September is historically a very stressful month in the trading world. And it sometimes can kind of bring this negativity overall where you're like, damn, like it's just been hard lately. Trading, especially when you're in a little bit of a funk or you're in a rut, trading can be hard, right? So the goal of this presentation is to make trading fun again. I want to have fun with this, and you're going to see what I mean. It's going to be silly, it's going to be this, but it's going to be valuable and fun. So I promise you, stick with me, and we'll promise you also, for those of you who want charts, we're going to dive into the charts at the end as well, right? The reality, in my opinion, is that most of you are probably much closer to success as a trader than you think. It's probably like 3 or 4 specific traits holding you back, and I have a feeling that it will be 3 or 4 of the ones that I'm going to talk about tonight. Right? So literally, if you can identify, be like, oh my gosh, this resonates with me. Okay, that's the step I'm going to take to change that. Then all of a sudden you can put yourself in a massively increased position to succeed. Right? So here's the format of how tonight's going to go. You can't talk about toxic traits without talking about your exes, right? So what I'm going to do is tell you all about one of my exes. I'm going to tell you about the toxic traits that they had. I'm going to tell you about how it connects to day trading and how it connects to one of the issues that may be holding all of you back. And then we're going to discuss an actionable solution, something that you can actually do in order to help improve and potentially fix that trait, AKA don't end up with one of my exes, right? We're going to talk about how you can figure out to avoid my exes. Right? Again, in this presentation, I'm not looking to reinvent the wheel here. I'm not looking to necessarily tell you information that you've never heard of today. I'm not necessarily presenting ideas that are going to be brand new concepts to you. That's not the goal. The goal is to get very specific on issues and see if we can solve those specific issues, right? Every time I do one of these webinars, I get the feedback after. I get like 98% 5 stars, and then I get like 2%. It's like, I wanted to learn the levels. I was like, I never said I was going to teach you that. Like, let's get the expectations clear. You know, my goal here is not to reinvent the wheel. My goal here is to help you identify that toxic trait and find an actionable solution for you to become a better trader on it. So let's start about this by talking about one of my exes, right? Francis, an amazing ex. Awesome girl, super exciting. Whenever we hung out, things were great. They were never boring. Whenever I hung out with Frances, I felt that rush. The problem, though, she was a little bit of a psycho, right? After our first date, she wanted to meet my parents. All of a sudden, she started showing up at group events uninvited. I was bowling, and she came and she just hung out with the bowling alley with my friend. I was like, what? You were not invited. There was many red flags, right? Many red flags. And correlating that into trading, the first toxic trait of trading is what I refer to as the FOMO buyer, aka Mr. Frank from It's Always Sunny in Philadelphia, aka entering a position before you have confirmation. Whatever that confirmation may be for you, I don't really care. Whatever strategy you use, it doesn't matter. Whether you're using the same strategy I do, which would be waiting for very specific candle triggers in order to enter you into a trade, or whether you're trading supply and demand, Fibonacci's, whatever the case may be, all of you, if you have any trading strategy, have some sort of level of confirmation before entering a trade, right? The first toxic trait of trading, in my opinion, is this idea of, oh, anyways, I started blasting, right? And essentially, the main problems that I have with this particular issues is when I enter a trade early before confirmation. What that means for me is that I enter before my signal bar closes, right? Before the candle that I'm watching to enter off of closes, right? What that means for me is that I can't properly determine my stop loss. The way that I use my stop loss, the way that my system works is that based on where I use one candle as a stop, if that candle fails, if we break under or over, depending if I'm long or short, and it fails, that's where I get stopped out. If I don't wait for that bar to close, I don't have a reference point that I can use as a stop loss. And that's a big problem for me, right? What this leads me to do is ultimately break my trading rules. It means that in some way, shape, or form, I've deviated from my trading plan. And for me, this is definitely the source of most of my large losses. The source of most of my large losses comes when I'm not able to control my ability to press the buttons at market open, right? That's really like, if you were to look back at most of my large losses, that's where they come from, right? Is where I have an inability to adhere to my trading plan. And as soon as the market opens, I just start blasting away. I just start clicking, much like Frank and much like my ex-girlfriend, Frances, just started blasting away, right? Immediately. And so for me, in order to find a solution for this, this is the one that's the most not straightforward. Remember, earlier on, I talked about how a lot of these are going to have really actionable, definitive things you can do. The reason I put this one first is it's still the one that I struggle with the most to this day of the things that we're going to talk about, except for toxic trait number 6, because this one for me is there is no definitive like do this and you solve it, right? With some of the other things, you can literally do one thing and you can solve that problem. With this, it's not so straightforward. Right. And so you have to take this kind of group approach in order to prevent yourself from FOMO buying into positions. Right. Because the real reason that we enter positions, the real reason we start blasting as soon as market opens is that we have some sort of fear that the chart is going to make a move without us. And if we have the fear that the chart is going to make a move without us, we just start blasting. We just start buying. We just start going for it. Right. So if this is one of the main problems that you have as well, here are some of the things that really helped me get over it. First is a concrete trading plan. I cannot, and you will hear me emphasize this several times tonight, and I can't emphasize it enough. Having a firm trading plan that you actually adhere to on a daily basis is incredibly important to becoming a successful trader over the long term, right? Now, I've talked about this before, but having a morning routine can help you just follow that morning trading plan and follow your trading rule, right? The more often that you do the same things in your everyday life, like make your bed, take a walk, go for a workout, whatever the case, before trading, if you do that every day, you're more likely to follow your trading rules. Next step would be having some sort of defined criteria for entry, right? And if you actually have something that triggers you into a trade, knowing where your stop and your is on that particular setup, that will give you less opportunities to kind of go wild and rogue from your plan, right? Next up I have is this, I've talked about this before, but it's this Amazon pillow ball. I saw them for the first time in an Airbnb when I was on my birthday. I was there on my birthday and I ordered like 4 of them on my way home. Highly recommend you to order one. It's $20 off Amazon. And I literally, every day when the market opens, I put my hands in that ball and it keeps me from being able to press the buy and sell button right away as soon as market opens. AKA keeps me from fighting that FOMO that I deal with every time, every day when the market opens, right? And then something I've recently started doing more and more and more that I have not talked about before. This is one of the areas where it's definitely a new piece of information for in terms of me presenting on, is broker open, broker close, broker minimize. So now what I will do is every single day when the market is about to open, I will put my broker in one of 3 states, right? The first is broker open and upload on my screen. For me, I watch all of my charts on Thinkorswim and I execute off of interactive brokers, right? So let's say, for example, like yesterday was a day that I was willing to take a trade in the first 5-10 minutes of market open. If Netflix had set up the right way, I was open-minded to taking that trade early on in the morning. So what that meant for me is I was in broker open mode, which means that I was watching the charts, but also my broker was open and I was ready to execute, right? Now, if I wasn't really sure if there was any setups I was interested in the first 5 to 10 minutes of the day, what I've now started doing is going into what I call broker minimized mode, which it sounds simple, but I will literally just minimize my broker. By not having it up on the screen and not seeing the options contract prices move, not seeing anything like that, I'm much more able to kind of watch the charts calmly and be like, okay, if something sets up and triggers, I'm only 1 click away from loading my broker up and being able to press the buttons to execute that trade. But it's also not staring me in the face, telling me to make a trade. And this has been a huge key for me in remaining patient during market open over the last several weeks. And it's really been like a month since I started doing this. It's been a huge thing where I'll have just the broker just minimized, just the minus sign. It's made a giant difference, right? And then there are days like today where I come into the day, and today we're going to talk about this once we dive into the charts at the end of this presentation. But today was a day where I was really worried about myself going on tilt. Historically, these are one of the days that I struggle with the most, is large gaps up where I don't have any swing trades open because I have a lot of FOMO. Again, we'll talk about that when we dive into the charts, but I was worried about going on tilt today. So for me, I straight up had my broker closed. Now, about 15 minutes into market open, I opened my broker because I was open-minded to taking a trade. I wasn't feeling FOMO. I wasn't feeling tilt, anything like that. I didn't end up taking anything, but the process of me having to go and enter my password and do the 2FA, it takes a minute or two to load it. That minute or two is what I needed to make sure that I was making a conscious decision on whether or not I actually wanted to put any risk on that day. And that can be a lifesaver because as a trader, in reality, one bad trade can be the thing that sets you back for life. So if you're able to take 90 seconds before entering a trade because you have to open your broker, right? Sure, sometimes you're going to miss a trade here or there. That might be the case. But it's going to be a missed trade on a day where you told yourself you wanted to be patient, you wanted to be more disciplined. You have your broker closed for a reason, right? Like the whole premise of why I had mine closed today was because I was worried about going on tilt, right? So having this process of, okay, today's a day where broker's open. I'm ready to make a move early on today. Okay, today, first 20 minutes, I'm not interested, broker minimized. Okay, today, I don't think I'm going to trade at all. I don't even want to be tempted unless something's perfect. And if it's perfect, it's going to take at least 15 minutes to 30 minutes to set up. So I'm going to keep my broker closed for now, right? That has been a huge, huge, huge transformation for me in my trading. And I cannot emphasize that enough. I genuinely cannot emphasize how powerful that has been for me as a trader, is having my broker on different things to market. It might sound small, but trading is a series of small things that help contribute to your mental fortitude and your trading psychology, right? Now, the reality is, though, is that this toxic trait is one of the toughest for me. Frances was a really hard girlfriend to leave because this is tough. This is still something that I struggle with on a daily basis. You know, this one, there's no easy solution. Some of the other ones have a little bit more of an easy, straightforward solution. Not Frances, not getting away from her. Not at all, not at all, not at all, right? All right, next up, I'd like to tell you about another one of my exes, Taylor. Taylor was Frances's friend, and Taylor and I had an instant connection. We got along very, very well, right? The problem with Taylor was she was a psycho. Taylor talked about marriage on our first date, and she was talking about children during week 1. We hung out at my apartment. I couldn't get her to leave. She wouldn't leave. She wouldn't leave. It was almost as if she was just so eager to jump into the next stages of our relationship that you could call her an eager beaver. And that's where we dive into toxic trader number 2, the eager beaver. This is something that when I was trading a cash account, because one of the things for this presentation that I really wanted to make sure is that I addressed people who are trading with smaller accounts, because I know it's a different ball game out there when you're trading with a cash account versus a margin account. There's a whole lot of different psychological factors out there. And I'm also aware that a vast majority of my following is trading with cash accounts, not necessarily huge margin accounts out there, right? One of the biggest things that I struggled with there was with this eager beaver toxic trait, right? Which is a person that cannot properly manage their buying power each day. right? Each day, this trader uses all of their buying power before the first hour of the trading day. I'm sure many of you out there are like, oh, damn, that's happened to me a bunch. I usually have this issue, right? So subsequently, you're not managing your capital usage very well, right? Essentially, you are way too eager to trade each day, and you end up putting on all of your positions very early on in the day and leaving yourself no buying power available for later in the day, for a swing trade, for an intraday trade, whatever the case may be, right? What this also usually means is that you're also not allocating your cash in a very safe way. If you're using 100% of your buying power, especially trading options during the first hour of market open, it means that you've taken some relatively aggressive positions, right? And that's typically not something you want to do during that first hour of market open, right? So the primary problem the eager beaver has is a lack of emotional control. Right? Let's say the eager beaver has a $5,000 cash account. On a regular basis each day, eager beaver that trader ends up using the entirety of their buying power, right? Before the first hour is even up, all $5,000 of their cash is gone. So the trader loses that ability to capitalize on intraday setups due to a lack of buying power. Oftentimes, this will also directly correlate with one of my other X's, another toxic trait, but we'll talk about that in a little bit, right? Right. So the reality is, again, the primary problem there is a lack of emotional control, right? Most people would automatically assume this is a risk management issue. And oftentimes it's not necessarily a risk management issue. It's like a capital allocation issue, right? Like it's like you're allotting your capital on all of your trades incorrectly, right? And what that ultimately leads you is it gives you a lack of executional control. You can't actually control how many trades and what trades you execute on because you're running out of your cash way too early in the day. Right. And where that all kind of ties to and stems together is with discipline issues. If you're using all of your cash on a regular basis and you find yourself routinely missing setups after the first hour or two because of it, at the end of the day, that is a discipline issue, right? It's an issue that ties back into your ability to control your emotions as a trader, right? However, I do think there are more solutions to this than some of the other problems out there. Right? If you are somebody who's trading with the cash account and you on a regular basis find yourself using all of your buying power too early on in the day, which is not everybody's problem, but for me, this was definitely a big problem because one of the other things that it would start to really mess with your head, and I'm sure we don't have the chat on right now, but I'm sure if I asked in the chat, there would be a million yeses. But how many of you out there have been in some sort of trade in a position, right? But you have decided not to close it, even though the chart is telling you to close it, because you're like, oh my gosh, if I close it, I'm not going to have any buying power left for the rest of the day. Like I don't want to be out of buying power, like all that, right? There's a ton of different factors that start to come into play once you run out of buying power on a cash account, right? And that's a really difficult thing to sort of try and navigate, especially when you're a small account trading options, right? So one solution that I have is straight up, I would kind of separate your cash accounts a little bit, right? Keep them with different brokers. Keep a little bit with TD Ameritrade, a little bit with Interactive Brokers, all very regulated, safe brokers, right? If you're able to allocate them a little bit differently, right? And then potentially even a small margin account, right? Which you can then use for swing trades, and having that margin account gives you the option to reuse capital should you need to on any one individual given day, right? Then you can make a serious change to your sort of mental framework of how much cash you have available on that day, right? The next thing that I would do is, if you're not already doing this, some people are, and they're just not able to control it once market opens, but many people I found literally aren't doing this. If you are trading with a cash account, and you need to make sure that you don't run out of cash on an individual given basis, you need to include in your pre-market plan how much capital you are planning to allocate to the trade setups that you are watching, right? So if you're watching AMD for a trend over $105 to then go long, right? And you're planning to risk 250 on that trade, you should allocate. You go, of course, depending on your system, you may not be able to figure out exactly how much of that 250 comes from the position size that you're risking, right? Every candle will be different, for example. However, you should figure out beforehand, okay, this is how much cash I'd generally be willing to risk if this trade sets up the way that I want it to. And this would generally result probably in a position size of a range from X, and Y, right? So in your pre-market plan, you can sort of incorporate how much of a particular position you plan to trade. Right? Again, these sound like small changes. I promise you, it will make a big difference, right? So for example, if you're somebody out there who's trading with a $5,000 cash account, or this number is arbitrary, you can change it in your head and make it any number. But if you're trading with a cash account there with a fixed number of cash, and you routinely find yourself with the toxic trait of an eager beaver, like my ex-girlfriend Taylor, right? Then one of the things that you could ultimately do is end up just spreading out your cash a little bit, right? Let's say that you have $5,000 and you're willing to use. You could put $2,000 in one cash account, put $1,500 in another cash account, and keep $1,500 in a margin account, right? The process of spacing this out allows for more mental flexibility, right? It allows you for more mental flexibility in terms of the positions that you're willing to take and how much cash you're willing to use on certain trades, right? The nice part about having one of those accounts being a margin account as well is that $1,500 in the margin account, yes, you only get 3 day trades a week on that, but on certain days, you can potentially either take 2 day trades in one day, aka reusing that cash, right? Or you can start to incorporate swing trades into the mix a little bit more, right? Whatever the case may be, having one of them, this small margin account, does give you a little bit of flexibility in terms of reusing your capital, right? So this is a common mistake that I see people making, is putting all of their cash account into one account rather than kind of spreading it out a little bit, which just helps mentally, at least for me, right? It very much helps mentally, right? All right, my friends, I'd like to tell you about my next ex here, Tasha. Tasha, she was a great person, fantastic person. She always had intelligent conversations. We had great banter. The problem with Tasha is she was a psycho. She was a classic one-upper. I don't know if you've incurred people like this in your life, whether it was in a relationship, a friendship, parents, brother or sister, whatever matters. She was a classic one-upper. Every time I said something, Tasha would always have a better story somehow. In addition to that, Tasha took everything personally. I would tell a story, and Tasha took it really personally. She felt it like she needed to tell a better story than me. And I was like, what the hell? What did I do to you? This story wasn't even about you. The worst part about Tasha, though, is she always had to get the last word in. Always, 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 always. You couldn't leave an argument without getting the last word in, right? Now, I attribute my relationship to Tasha kind of like our toxic trait number 3, which is the Avenger, right? The Avenger. For me, this person cannot regularly manage their emotions once they close a position, right? So after closing a position, whether it's a win or a loss, which is where most of the people don't talk about on this, most of them talk about revenge trading, but they don't talk about hero trading, right? After closing a position, whether it's a win or a loss, if a trader feels so much FOMO that they immediately enter a new one, you are either A, revenge trading, or B, hero trading. Both are toxic traits, very similar to my ex, Tasha. If I couldn't handle Tasha, you can't handle Tasha, right? So the reality is it starts with either one of 2 types of trading, right? The first is revenge trading. Again, I'm not expecting to reinvent the wheel here. I'm sure that every single person who's on this webinar, who's ever made a trade in their life, has also made a revenge trade. It's like a rite of passage as a trader, right? Basically, the idea is that once you close a losing position, you often enter new positions right away with double position sizes immediately after, just to try and recoup that loss. Historically, these trades are based off of emotion and not logic, right? And it ultimately ends up leading you to massive overtrading that ends terribly. I once heard a trader try and claim a strategy called the get green, which was if you lose your first trade, double the size on the second one so that you could get green on the day. Quite possibly the worst advice I have ever heard, and it very much reminded me of my ex Tasha. But you couldn't tell that trader that it was a terrible idea, terrible advice. They always had to get the last word in, even though they were blatantly wrong, right? Now, a lot of people talk about revenge trading, and some people talk about hero trading, but I don't think they talk about it in the way that I want to break it down for you all right now. Hero trading is one of the most dangerous things that you could possibly do as a trader, and it comes after closing a winning position. In reality, it always comes after one of 2 things, at least for me personally. This is how I've always found myself hero trading, right? Either A, let's say I'm in a trade, and I reach $500 profit. I don't sell. It comes back down to $250 profit, and I sell, right? Now, instead of being happy with that 250, what then I do when I'm hero trading is immediately enter a new position with double the size in order to try and avenge that loss. It's like I feel like I deserve that $500. I feel like I'm entitled to that $500. Even though the chart told me you're only supposed to get 250 on this particular trade. I followed all of my trading plan, all my rules, all my strategy, all everything. But I wanted the money, not what the chart was telling me, right? So the first type of hero trading is when you're up a certain amount, then you pull back and you take a second trade to try and reach that amount again. Usually never ends well, right? Now, another way that people will hero trade is, let's say you're in a trade and you're up $500 and it's like, oh my gosh, it hits your target, $500. You sell, you close for profit. Boom, great news, right? Except the trade keeps running without you. Next thing you know, it's at $1,000 profit. That puts you into the loop, which we've talked about a lot before. right? But an example of how you would actually do that is by hero trading, essentially by saying that, oh my gosh, even though I sold for $500 profit, and that was my plan, that was part of my plan. I was expecting to make 500 and I did, I pulled it out. I see the trade ran to where I would have been up 1,000. All of a sudden, you feel like you deserve those profits. You feel like you are entitled to those profits. You feel like that $1,000 should have been yours, right? Because the trade worked and you were in it. So why couldn't you have held it to the absolute max potential? That's the way our brains work, right? You feel like you deserve them. You feel entitled. Truth be told, that's really the reality of it. When you're trading like an Avenger, when you're trading like Tasha, you feel entitled. You feel, you take everything personally. You feel like you got to get the last word in, because the market, when you let a trade run, when you close a position, it runs without you. On some level, what's happening is that the market's getting the last word in, right? If you're wondering, Jake, why the hell are you using, these examples of exercises? Because I'm trying to tie together examples of things that happen in real life and how that can be with trading. If you're somebody who likes to get the last word in on every single argument or conversation or whatever the case may be, there's a pretty good chance that when you close a trade and watch it either run without you or you gave back profits initially, you're probably going to hero trade because you don't like the market getting the last word on you, right? It's an unfortunate reality, but these traits that we have as human beings in relationships come back and tie together into our trading. So if you're somebody who struggles with getting the last word in, guess what? You're probably somebody who feels like you are entitled to when a position continues to go. Right? When a position continues to run without you, you feel like that's yours, right? You feel entitled to it. So how can we fix this, right? In my opinion, this is one of the most straightforward solutions that we're going to cover today. First, the biggest answer, and I talk about this a lot, is physical removal from your screen. And you are done with the position, right? Or if you start to feel like that in any way, shape, or form, you start to feel those emotions coming up, where you're either going to revenge trade or hero trade, the best solution, hands down, is get up and walk away. If you're not at your desk, you can't do shit. You literally can't do shit. If you're not at the desk, what can you do? I don't have my brokerage on my phone, so I don't know. I go back and forth between having and deleting it. But most of the time for me, when I walk away from my desk, I can't trade because I literally can't do it. So that's how I remove myself from putting myself in a position to revenge trade or hero trade, is I get out of the way. I remove myself from that situation entirely. It's almost as if I'm in a fight with you and you're trying to get a last word in. And what do? I just walk away. I just walk away and I remove myself from that situation entirely. It's the same exact way you would get out of a conversation like that with somebody who you're never going to win, right? Like you just know you're never going to win, right? What's one way? Stand up and walk away. Stand up and get out of the room, right? Hand in hand with this would be a trading break, right? At least 5 to 10 minutes in between positions. I like this as a rule, is when you exit a position, just stand up, walk away, go get some water, take a walk, make a phone call, whatever the case may be, give yourself a break. Because what I have found, here's what I've found. I am most susceptible to re-entering a position or some sort of aggressive hero or avenging trading in the first 1 to 2 minutes after closing a position. And really, actually, I'd say it's first like 5 minutes. The first 1 through 5 minutes, I am very much at risk of re-entering and doing something stupid. Once I pass the 5-minute mark, I'm usually pretty safe. I'm usually my emotions have cooled, my emotions have calmed. It may not be 5 minutes for everybody, it might be 1 minute for some people, it might be an hour for other people, right? But you need to have some sort of break where your emotions are not in a position, right? Another solution for mine is withdrawals. I can't preach this enough. I encourage you all to withdraw your profits, even if you are red all time to date on your trading career. I encourage you to withdraw your profits and get in the habit of it early on in your trading career. Find a set number that you are comfortable trading with it and trade with it for a while. Withdraw anything on top, right? Now, one thing that I would like to recommend, earlier on, we talked about the eager beaver, right? My ex-Taylor. Right? Now, one of the other things that oftentimes traders struggle with is that with Taylor, the issue was that she would burn all her cash early on in the morning, right? And would have no money for trades later in the day. She was an eager beaver, right? What a lot of people struggle with sometimes, though, is they'll make their first or second trade will be a good, solid trade. They'll be happy with the day. They'll be content. They want to be done for the day, but they have more money left in their cash account than they're like, oh my gosh, I have more left. I can make more. I should take another trade. Why not? It's there. I should use it, right? Oh my gosh, I took one trade on the day. I hit a number I'm happy with. I'm very happy with the trade, all that, but I still have a couple $1,000s in my trading account. Shouldn't I take another trade, try and make more money? Right? I found that was a massive problem for me all the time. It led me to either revenge trading or hero trading, depending on the case. So one of the things that I would do is this SPY hack. I've talked about it briefly before, but not super publicly, which is what I would do is I will literally sometimes on a cash account, I will buy a SPY in the money option, like expiring in 2 or 3 days. I'll buy a super in the money one, and I'll buy it and I'll turn around and I'll sell it for a couple dollars gain or loss. But by the process of doing that, you then eliminate your cash buying power on the day, which means that you are no longer at risk of doing something stupid with that buying power, right? It's a very, 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 very powerful tool for anybody who is struggling out there with containing their emotions and using their buying power after they should be done for the day, right? But if you're somebody who's been an Avenger, you're somebody that's been hanging out with Tasha, right? And then I highly, highly encourage you to start using some of these solutions to solve some of your problems, right? I want you to physically start removing yourself from the screens more. I want you to implement trading breaks in between taking positions. I want you to implement withdrawals, and I want you to implement this SPY hack if you are regularly giving back your profits after having them using your first 1 or 2 trades of the day, right? Oh, Monica. She was so much fun. She was a great ex. She was always exciting, always kept me on my toes. She was extremely passionate. The problem was she was a psycho. I never knew which, this is Monica. I never knew which Jessica. Yeah, they're not real. I never knew which Monica I was going to get. I felt like Monica was bipolar. One night we were having an amazing time, and the next night she was threatening to slice my body parts off. You genuinely had no idea what you were going to get when you had Monica. Right? And for me, this represents toxic trait number 4, the split personality, aka a person who cannot stick to one concrete strategy. And I know there's some of you out there right now watching in. I know there is, right? Where one day you're trading Fibonacci's, one day you're trading supply and demand, one day you're trading bull flags, one day you're trading EMA crosses, and essentially you're the strategy hopper, right? You have from strategy to strategy, you have personalities. You cannot figure out which one that you actually want to stick with and use. And this brings up a whole lot of problems for you as a trader, right? For me, the primary problem with strategy hopping, and here's the biggest thing I want to talk about on this. The primary problem with strategy hopping is that there's a lack of consistency in your routine and in your thought process, right? One of the biggest things that drives success as a trader, right, is that every day you have a pre-market routine. You come up, you check the charts, you formulate your trading plan, and you define what you're willing to do on the day, right? That's a huge key success for a trader. For me, every single day, I wake up and I'm looking at the same things, the same exact things, every single day. Every single day, I look for XX over Y, YY under Y. It's the same exact things every single day. I haven't looked for something else on a chart in 3 or 4 years at all. I haven't even thought about it, right? If you're somebody that's using multiple strategies, one of the issues that you likely have is pre-market. It's like, what am I looking for? Am I going to look for the Fibonacci bounce today? Am I going to look for the supply and demand break today? Am I going to look for the EMA bounce today? It's like, what am I looking for? Right? And then ultimately, sometimes those strategies will conflict. You'll want to be taking a bull flag, but that bull flag is right in a supply zone. So do you go long into a supply zone with this bull flag, even though the EMA is across? It can be confusing and tricky, right? And in my opinion, too much confluence. A lot of times people talk about confluence. Like you need a fib and a level and a trend line and an EMA and a MACD and all these things. You need 7 levels of confluence. And then all of a sudden it's like, oh my gosh. And you end up skipping a lot of really simple, straightforward trades because you're stuck on this analysis paralysis of confluences of the 8 different indicators that you're paying attention to, right? So one of the biggest things that I would recommend, right? The solution to the split personality is simply choose your fighter, my friends. Pick a strategy and stick with it. I don't really have a preference or care what strategy you choose. Obviously, I'm biased. The one that I use, I think, is really straightforward. I have a ton of education on my YouTube out there about it, right? If you're interested in that, I think that I would love that. I think that would be great. I think that you're going to have success with it. Guess what? If you reach out to me like, yo, Jake, I'm consistently profitable. I've been making a ton of money over the last 3 years. I trade supply and demand. I'd be like, okay, that's great. That's badass. Good work, right? Like it does not matter to you which strategy you pick. Pick one and stick with it, right? And give it time. Here's one of the things that I'll say is that it takes so much longer than you might think to master a strategy that's one of the biggest problems that I have. Even I'll be straightforward with you. This is one of the issues sometimes that we have with Mastermind students in the program that I have. I teach a strategy fully comprehensively A to Z that I think is, in my opinion, and in their opinion, one of the best ones out there. A lot of people will expect at the end of their program, at the end of the 4 weeks, they're like, oh my gosh, I am going to be breakthrough and be fully profitable. I'll never have an issue. I'll never have a question about charts ever again. And it's like, wait, pause. Right? Like even you can learn something in a textbook, the perfect examples of it over the course of 4 weeks. It's going to take you time though. You're going to need to see this stuff in real time because guess what? It took me months to master the strategy that I use, right? And guess what? I still learn new things every single day. I still improve as a trader every single day. So whatever strategy you choose, give it some time, give it a month, give it 2 months, give it 3 months, give it 6 months, give it time so that you can commit to it and truly see it through. Because guess what? Even with the best teacher in the world, which I like to believe in that realm, right? Even with that, you're not going to be able to master any new strategy over a 2, 3 week, 4 week period. It's going to take you time in order to integrate it, in order to see it real time, right? In order to see it in live action and see how things work and fail. Whatever the case may be, I encourage you to pick a strategy and stick with it. Give it time. Now, if you've been trading the same strategy for 10 years or for a year, for 1 full year, and you still can't find even remote understanding of what you're doing, then maybe it might be time to start to reevaluate. Or ask yourself, is this really a strategy issue or is it something that's more in my psychology, right? Is it more something, one of these other issues that we've talked about, right? Monica was a great ex, but trust me, I do not ever want to deal with a split personality ever again. I do not want to be bouncing between strategies on YouTube ever again. I do not plan to. If you are in the stage right now where you are hopping between from one strategy to the next, trying to find what works for you, quit. Stop it. Stop it. Get some help. Stop it. Get some help. Pick one and stick with it. Whatever it is, I don't care. Pick one, rock with it, right? Rock with it and give it some time. Now, my next ex was a wild one, crazy Mary. We had a very intense relationship. We shared common interests over sparkling water. Her problem was, though, is that she was a psycho. Right? She could never take responsibility of anything. Even when it was wrong, it was never her fault. Me and Mary would have a great time, but it turned out that every single thing that we did, it was never her fault. She was late for our big party. Oh, I'm sorry, I got caught up at work. Oh, I couldn't make it to this. I'm sorry, I got caught up here. Oh, I'm sorry that I stole all your LaCroix. It wasn't me, it was somebody else. What? She could never take responsibility for anything. It was never her fault, Mary, right? And that leads us into toxic trait and trader number 5, the blame shifter, right? This person refuses to take responsibility of their mistakes. Most days, this trader finds themselves either blindly following signals or really what it is most of the time, there's an excuse for why they're blatantly ignoring their own strategy. AKA, it's not my fault. Right? For whatever reason, it's not my fault. I got a work call. Oh my gosh, my DoorDash arrived at the worst time ever. Blah, blah, blah. Every now and then, there are a few things that can fall into that category. 90% of the time, it's on you, right? So the core problem here is refusing to accept responsibility. And here's what I'll say, gang. Here's why this is such a big deal, right? If you can't accept responsibility for the mistakes that you are making as a trader, then if you can't accept responsibility for what you're doing as a trader, then you can't identify the mistakes, right? And if you can't identify the mistakes, you can't correct the mistakes, right? So accountability is the first step to growth. In order for you to succeed as a trader, you need to accept that 100% of the decisions that you make as a trader are your decision. Yes, sometimes those decisions might be influenced by an outside bias. You might be paying attention to somebody like myself says, or another creator out there. Oh, I liked this chart. And that might have impacted your thought process. At the end of the day, you're still the one who made the decision to do what you want to do. And if that becomes a problem for you, guess what? Cut everybody out. I have one student who I always love to shout out. His name is Raiden, and I know he hates social media, so I don't know if he likes when I talk about him. But he's a mastermind student that I had, and for the first month or two after taking the program, he struggled a lot because in the Discord, it was so much people like talking. Everyone was giving their ideas. Everyone was talking about analysis, and he got so cross-eyed, right, that he was struggling to find his groove, right, because there was so many different people giving analysis, right? But he had already learned the system. He had learned our system. He had mastered our technical system like the back of his hand, right? So what he started doing, again, you can use our system, any system, doesn't matter, right? He started trading in a room by himself. He has no Discord, no nothing, no outside analysis, no signals, not even other students talking about the same strategy he uses. He trades in a room by himself. Guess what? He has a strategy that works. He's fully self-sufficient now. So he trades fully on himself, right? Because he found himself, right, to a point where the others were impacting his decision-making. So rather than blaming that, he put himself in a position to trade on his own. Now, that's not the right answer for everybody. Most traders out there succeed more in a community than others. But if you're the type of person that routinely finds yourself having that issue, then the solution for you might just be no Discords, no communities. I know. Coming from a dude who owns one, you kidding me? You think I'm telling you something? Yeah, I don't give a shit. I don't need your money. If you trade better without outside noise, try trading without the outside noise for a couple months and see how you do, because it will probably be a little bit better than you think. If you have a really firm system and strategy that works, right, then cut out some of the outside noise and don't put yourself in a position where you can't even blame shit, right? The biggest key that enables you to do that is having a strategy that works and being self-sufficient on that end. Once you have that, you can potentially be set for life, right? The reality is though, that there's no definitive solution for the blame shifter, right? Yes, leaving Discords or communities may be the right one. However, what it really requires is a shift in mental framework, right? There's no way around this. You're going to simply have to shift your perspective and understand the acceptance of all risks that are associated with trading. And at the end of the day, what you're going to need to do is put in the work to journal those mistakes, identify what went wrong on your end and how you can prevent that again in the future, right? Because at the end of the day, it's you versus you out there. It's not you versus anyone else, not you versus the market. It's you versus you, right? Now, the last one of my exes, oh gosh, gang. Sarah was an absolute psychopath. There was really no pros. We had no good elements of our relationship. Terrible ex. She was just straight up. You know what the biggest problem that we had was? She was a psycho, right? Everything about her, always. She was cheating on me and lying about it. She was a psycho. I would catch her in a lie, and she'd continue to lie to my face. She would look me dead in the eye and lie. And say, no, I wasn't doing nothing. Right? Let's lead this into toxic trader number 6, the egomaniac. The egomaniac refuses to admit that they are wrong ever. Miss Sarah Marshall. Most days, this trader routinely ignores their trading plan, and really what it comes down to is often averaging down on positions. This is still a habit that I struggle with from time to time. It's one that bites me from time to time. And really what it comes down to at the end of the day is loss aversion. You don't feel comfortable taking that loss. Why? Because you're an egomaniac, right? You're solely focused on being right, right? You are solely focused on being right, right? The primary problem that an egomaniac has is the loss aversions and admitting they are wrong, right? So common problems with this, and I would love, just raise your hands for a second. Even though I can't see them, just raise your hands and get with me. How many of you have ever had a day trade that didn't work out? So all of a sudden your day trade, well, it turned into a swing trade. Or how many of you have had a bad position that you all of a sudden just averaged down on, right? Or how many of you have held positions past stop loss? Or how many of you essentially have had all the bad habits you can think of? Oh my gosh, you actually raised your hands to the Zoom app. You didn't have to do that. I appreciate you, right? The answer is almost it's every single one of you, right? Now, here's where I'd like to get a little bit real with you all, honest. This has been a really fun presentation. I've loved talking about, my exes, me and Sarah Marshall, my ex. Damn, Sarah Marshall kept cheating on me, But I'd like to get real for you all in a second, right? Because part of this presentation has been obviously me connecting my psychopathic exes to some toxic trader traits, right? And in this text, we talked about somebody who's cheating on me and lying about it, right? All that, which is terrible human behavior. You would never want, to cheat on somebody or anything like that, right? However, I'll just ask if any of you had been doing these things, right? If like day trade turning into a swing trade, averaging down into a bad position, holding past the stop loss, essentially all the bad habits that you can think of, right? So if you've done one of those things, I'm not saying that that's the equivalent to you cheating on a partner or something like that, right? But what I will say is I want to get just straightforward with you all and very real for one quick second. That's you cheating yourself, 100%, right? That is you saying that there's a right way to go about trading and succeeding, right? Finding a strategy that works, mastering that strategy, mastering your trading psychology, mastering your risk management. It's a fact. You all know that this works. If you can do all these things, it works. And there are certain things that you're supposed to do in order for trading to work, right? And if you routinely do one of these things, it's not the equivalent to cheating on somebody in a relationship, but it's the definition of cheating yourself. You are literally cheating yourself out of a potentially life-changing career. Why? Because you can't stick to a couple of simple rules? You can't stick to a couple of things that work? Like if you know these things work and you blatantly choose to ignore them, that is the definition of you cheating yourself out of something that could be life-changing. So I wanted to get just serious there for a second to kind of reinstill this in everyone's head. I want you to think about this the next time that you have a trade where you're debating averaging down on a position you shouldn't, or you're holding a trade past your stop loss when you shouldn't, right? Think about that. Oh my gosh. Maybe don't think about it in the way as if I was cheating on my partner right now, what would they think? No, but think about it. Oh my gosh. If I was talking to my partner and I was breaking down to them what exactly I was doing right now, and I was saying, hey, I'm doing something that I know is wrong, what would they think of me? Right? What would I think of myself? What am I doing? Like, what am I actually doing to myself to become a better trader or a better person that day if I am blatantly ignoring the things that I know are wrong, which is what somebody who cheats in a relationship does, right? You're ignoring something that is blatantly wrong, right? So I didn't mean to get too dark there for a second, but I truly want that to start to stick with you all. When I first I never heard it phrased to me like that, but when I first heard something even remotely in that realm, it hit really home to me. I was like, holy shit. I was like, damn, like I've been cheating myself this whole time. I've been doing myself a disservice, right? So if you've been doing some of these things, the reality is that you have to find your way out. And your way out is everything that we've talked about tonight. Solving all of the other toxic traits will lead you into a good chance to solve number 6, right? If you have structure in your life and structure in your morning routine, it will help you be able to adhere to your trading rules and trading plan more, right? If you're an accountable person in terms of identifying and accepting the mistakes that you made as a trader, that will help you improve in your trading psychology. Right? If you have discipline in your life, inside and outside of trading, this will help you improve as a trader. The separation of accounts, I genuinely believe that's a small step that everybody can take that can massively improve their trading, right? And above all else, the biggest and most simple and straightforward way for you all to improve on some of these toxic traits is the adherence to a trading plan. If you can formulate your trading plan every single morning and then simply just execute it, whether it works or fails, you will succeed as a trader. You just have to be disciplined enough to stick to it day in and day out, adhering to that trading plan. That becomes a lot easier once all of these other things have fallen into place, right? So the 6 toxic traits of a trader, right? The FOMO buyer, Francis. We had the eager beaver, my ex Taylor. We had the Avenger, wild Tasha. We had the split personality, Monica. She was crazy. We had the blame shifter. I forget the blame shifter's name, but she was kind of nuts. Mary Jane, that was MJ. She was nuts. And the egomaniac, Sarah, the cheater, the craziest, right? So what I hope that you all can walk away from this portion of the presentation with is which one of these is your biggest issue and how do you plan to fix it, right? These are one of the things that nobody can come in and change this for you. This is a change that you internally are going to have to make. However, my hope for this section of the presentation, my genuine hope, was that if I'm able to lay this out for you in a way that you've never quite heard it before, or in a more unique way, it might stick more than ever. Because guess what? Now you're going to be able to look back on this recording and be like, damn, like the next time that I'm considering breaking a trading rule like this, it's kind of like I'm cheating myself and I'm lying to myself over and over and over again, the same way I would be lying to a partner in a relationship, right? Or the next time that you are trying to debate whether or not you should re-enter a position as soon as you close your last one, you remember that, oh my gosh, Tasha was crazy. I could never end up with Tasha. No, I need to take a step back, at least just 5 minutes away from the charts, and I'll be good from there, right? I genuinely believe this can make massive changes in your trading psychology as a whole, right? Now, I promised you all as well that in addition to this presentation on trading psychology, I also promised you a little bit of chart analysis as well. So I wanted to make sure to kind of dive in and break down the trade that I took yesterday, as well as the setup that presented itself on the NASDAQ today, and how that kind of moved the market as a whole, right? So first, yesterday in my little free broadcast channel, I posted that Netflix was a top short watch, right? And coming into that day, here was the game plan on Netflix. And I'm not sure you can see me typing this, but I'm typing something. Spike over level. Fail level. Fail. So coming into the day, Netflix for me was a top short watch. It was weak. It had a level that was acting as resistance at 377.13. And I was interested in taking this trade to the short side, right? So what did I do? I created a trading plan, right? As I've mentioned, for all of you who are, the most important thing that you can have as a trader is a very, very concrete and definitive trading plan, right? A very actionable trading plan that you can actually take things off of, right? You also want it to be very specific and defined. That way, there's not a whole lot of room for error. There's not a whole lot of room for debate on what you want to happen, right? So for me, coming into the day, based on the trading strategy I used, the plan was as follows. I wanted us to open up underneath the level, aka I wanted this green one to open up beneath this level here at 377.13. So the first one, we did that. We opened at 377. We opened at pretty much call it 376, right? 376.05. That's where we opened, right? The next thing that I wanted was a spike over our level. From there, I wanted us to fail that level and start selling off, and then fail under the opening print. If all of those things aligned, I was open-minded to taking a short position on Netflix, right? Now, another thing that I was open-minded to doing on this particular day was Tesla. It wasn't this particular day, sorry. It was the day before. Just to kind of give you some contrast as to the nether day when I would be creating a trading plan. On this day, I had the wrong read on Tesla pre-market, but what I said was part of my trading plan is a trend above 247.29. I'd be open-minded to long positions, right? Tesla never got that, right? Tesla never got the trend and setup that I wanted. So for me, that means that I just sat on my hands that whole day, remaining patient, and didn't end up taking any trades whatsoever, right? Because it didn't follow that morning plan, right? However, on Netflix, the following day here, we actually did get a trade setup that followed this plan exactly, right? And then from there, it really wasn't rocket science, right? From there, I took an entry on what ended up being a 15-minute lower high. So I shorted right about here. I actually got in a little bit earlier. I shorted there. I kept my stop above here, and my first target was the low of the day. Second target was down at 3 365.08, but that was really far away. So I wasn't expecting that to necessarily trade today. They trade that day, right? This was really a picture-perfect trade setup. Again, followed all of the criteria that we had for the morning plan. Because it was weak pre-market, we were looking for shorts. It opened underneath the resistance level. So we were basically waiting for a rejection of that level, but I wanted these specific things to happen. That way, I could find an entry with a very tight stop loss, which I did. The entry I had on this trade had about a 25-cent, 30-cent stop loss, which was relatively tight considering we made $150 per contract on that contract, right? So this was, again, a setup that I was very interested in, and it ended up working out, right? Now, today was a little bit different. Today is one of the days that I historically struggle with the most as a trader, right? I struggle with it because I mostly trade to the upside, right? I mostly like to trade calls. I traded a lot of puts the last few weeks, but historically speaking, like a good chunk of my trades are calls. So when the market opened up with a massive upside move, right? When the market opened up with a massive upside move, right? Pre-market here, and I didn't have any risk on. I wasn't in that trade at all. I could feel myself getting FOMO, right? I could feel myself getting FOMO and feel like, okay, because one of the things that I do on days like this sometimes, and SPY would have been an even better example because it never got any break above the highs, is I get so much FOMO that I convince myself that we're for sure going to get a clear uptrend, right? And I buy in early on in the morning, trying to capture that early morning move up. And then I end up fighting the entire intraday downtrend all day because I feel like I owe it to myself to catch the long, right? When in reality, we have a very clear trend, right? So today, knowing that we had this gap up and knowing that the NQ was gapping right under a level that I was essentially using as a target over the last few days, I wasn't super interested in it, right? Because really, I thought there was essentially a 50-50 opportunity of what could have happened next. On big gaps up that happen like this, I would say they have about a 50% chance of getting upside continuation and about a 50% chance of trending to the downside aggressively, right? Or failing the gap, so to speak, right? She might be looking at this chart and thinking, Jake, couldn't you have gone long early, then gone short? Yes, but then you would have had to have been anticipating an early pop, then a failure. It would have been a lot, right? The reality is that while there are clear short entries here, like there, maybe here, this one's relatively clear. There are some clearer short entries here. There was also a lot of traps. If you went short here, you got caught. If you went short here, you got caught. If you went short on this green bar, you got caught in the same candle. You got stopped, right? If you went short on this red bar, right? That one would have worked, but you would have looked like a double bottom fake out on the next green candle. So it was very tricky, choppy action, which is traditional on gap up failures. So for me personally, I just decided to avoid and stay away with this one entirely, even though it did end up failing a level and provide a short entry opportunity off of that level. I personally decided to stay away for the day, right? But that being said, it was an awesome trading week overall. There was a few hiccups here and there, but we had a couple of really strong trades to end the week. My hands down best trade of the week, and it's not close, was on Netflix, and this one on Thursday, where we had essentially a stress-free 100% type of 4 or 5 hour trade. I realized like 3.8 R or something like that on this trade. So it was a really, really high quality return for me. But that being said, my friends, I hope that you all have enjoyed. Let me stop the share right there really quickly. I hope that you all have enjoyed this webinar. Again, as mentioned, I always like to know, I'll turn the chat on for just a second in case there's anybody who wants to shout out and had a good time. But I hope that you all enjoyed this webinar. As I mentioned, I always like to try and bring like some fresh perspective for you all. I don't like to repeat the stuff that I have mentioned in previous webinars. I don't like to talk about stuff that I think is like really genuinely out there. I like to try and bring some brand new ideas, right? So I really, at the bottom of my heart, hope that you took some sort of value from this. I hope that it could help improve your trading and kind of give you, really the biggest thing is like it's tricking your brain into muscle memory, right? Like if you can trick your brain into being like, oh my gosh, I remember when Jake was telling me about that crazy ex he had who wouldn't cheat on him and wouldn't lie about it. Damn, now I'm cheating myself when I average down out of a position. I don't want to do that anymore, right? These little few things are a big takeaways that you should have that I hopefully can change your perspective entirely. So thank you all so much for being there. The chat is going wild. I love you all. Thank you for everyone who shouted out, take the mastermind. Yes. I didn't answer any questions about the mastermind. If you have any about those, this whole thing is not a sales pitch. That's not the point of it. I'll post the link on my Instagram afterwards if you're interested in applying. But again, this was not intended as a sales pitch. But I would love to, just for reference, I think the biggest takeaway, hands down, the biggest takeaway that we can have from hands down, the biggest takeaway that we can have from this presentation is that I like psychos. I think if you trade, you all like psychos again. Oh, somebody said, what about the hesitation? What about the hesitation psycho? Honestly, I think what that just means, I think you just proved it. I think that means we have to do another one of these. I think we have to do another toxic trait with more X's because I think there's more psychos out in the world. I think there's a lot more toxic traits that we haven't talked about out there. We gotta do a round two. All right, I love you all, everybody. If you're in the chat and you want to yell LFG, I would love you for it. I love you all so, so much. What an incredible free webinar. I hope you all had a great, great, great time. Any questions you have about anything, do not hesitate to reach out. I love you all very, very much, and we'll talk soon. All right, cheers, gang, 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 gang. Sorry, I saw one person pop asking about the Discord. Do I have a discount on the Discord? We'll get one up in the near future. We'll get one up in the near future. We'll do that in the near future. Stay tuned, Zoom. Stay tuned. Gang, I love you all so much.